Okay, hi everyone. This is Wayne and it's Monday, April 6th. And wow, we got some good action in the market today, some really nice moves. But uh, the purpose of today's video, I want to show you how we can keep it simple using the KISS principle and just stick to basics and make consistent money in this market. Today we come in, there's a big surprise. It's a big gap up in almost everything across the board. But we come in and we just sit patiently. We know we have 3 or 4 or 5 setups that are usually going to work, and we patiently wait for those setups to develop, and then when they do, we pounce. We're not in any kind of fear of missing out, FOMO mode. We're not chasing. We're not anxious because everything is gapping and going away, and we're frantically trying to see what we're going to buy. We just patiently wait. We let them come to us. We have our few setups, and when the setups occur and trigger, we execute. That's it, and we stick to the rules. So let me walk you through today's action, and then I'll do it sort of play by play in a slide presentation, and then we'll walk over the charts and look how it actually played out as well from looking at the overall chart. So we come into the day, and the first trade that developed for me, I'm watching Apple and Boeing. Those are my two favorites right now. They both had gap ups, and the first one that set up was at 10:30 a.m. Eastern Time. So the market's already been open an hour. I didn't buy anything at the open. I didn't chase anything. I let it come to me. So what we had was in Boeing, that's BA, we had a Know Your Limit 8 set up. That's where we're watching price to come back and pierce that 8-period exponential moving average, and that's our setup, a Know Your Limit, because we enter on a limit order. When it pierces that 8-period EMA, we had a clearly defined buy zone with 3 levels of support. We had the 8 EMA, we had a pivot line, and we had the VWAP, all right there as 3 major lines of support for confluence for us. They're all in a very tight range, and that gives you a perfect buying zone where you have a lot of support for the stock for it to make a continuation move higher, if that's what's going to happen. So what happened? Price penetrated into the zone. It pierced the 8-period moving average, and then a pivot, and then came like within a couple of cents of the VWAP on this chart that I'm using, Trading View, but on TC2000 it did penetrate the VWAP. So sometimes the charts, the different platforms have a different measuring for some of these lines, but close is good enough in most cases. So this one happened quick, and I was entering and setting up the trade and everything, so I didn't get an exact screen capture at the time of buy, but here is what it looked like at the time. So price came down in this area, pierced, as you see that wick forming, and then it popped right up. Now, that was the trigger and the first take profit on a quick scalp. So on something like this, what we can do is exit 80% of the position on that first pop. That's your quick take profit It was a successful scalp. We hit it at exactly the right area. We got money in the bank on 80% of the position. Now we can hold 20% for a move on toward day highs if that's what's going to happen. So for example, if we bought 5 calls on that drop, on that entry, then we can sell 4 and hold 1. Or if we took 10 calls, then you can sell 8 and we're still holding 2. So let me go back up. On this little pop right here at the top of that green candle, that's where we exit. So with 5 calls, we would take 4 off right there. Or if we did a position with 10 calls, then we would have exited with 8 calls right there, and we have 2 still holding. Is that clear? Okay. So now, if we continue to hold that second piece of that 20%, our next target would be up here around day highs. So as you see, this thing continued up, and we just patiently waited, and then on a break of those early morning highs, that's a good spot to take the rest off. And that's what it would look like. So we would take first 80% off right here in this level, and then take the remainder up on the pop, on that next pop as it broke day highs. This is dissecting it in a little more detail, blowing the chart up and showing the levels. So this first arrow at exit 1, 80%, that's where we take off the first 80%. And then let it continue to move higher till it broke those day highs, and there's the second exit on a break of day highs right there. Also, we're into the noon hour, so that's a good point to exit. As you know, it's time for lunch. Your day could be done right there, and also that's generally where things either digest or pull back and so on as the market loses volume during the lunch hour. Next, trade that set up a few minutes later at 10:45 a.m. Eastern was Apple. So we had Apple gap up, and Apple continued fairly quickly up, making a new high right after they opened. So we just waited. We wait patiently. We've already booked 80% on that BA trade, and we're free to do another trade. We don't have our mind and thoughts and emotions tied up with anything. We got money in the bank from the other one. We're just letting the remainder ride, and our minds are free to see another opportunity and act on it if it shows up, which it did. So Apple, again, the thesis was gap up big. We're looking for a pullback. After it made highs, it pulls back. It pierces through the 8 EMA, and that's our know your limit entry point. So here, once again, we have beautiful confluence. We have a pivot and VWAP all in the same little area, which adds to a very strong level of support where we can buy with confidence for a continuation move higher. This thing gave us a perfect pierce of the 8 EMA and a pivot touch. Boom, there's our entry. And here's how it looked on the chart at the time. So very nice. We got our entry. And now we have, how are we going to exit this thing? So we have the option of sticking to our quick 20 cents in profit on calls, or we can try and hold again for day highs, because we saw BA already go to day highs and we're looking at the market overall in our other charts, and we see that, there's clearly a bullish tendency today. So we can say, okay, I'll either take 80% off when I'm 20 cents in profit, or I'll just try to hold it and see if it makes day highs. Either way, that's up to you, but you've got money either way. This thing never went against us. You were never under any psychological stress at any point from the time you pulled the trigger on this trade. It's just a matter of deciding how much profit you want to take and get out or not. So here's what we did. We let it go up to close as it approached those day highs and took 80%. So as you see up here, when it was going towards $254, that's where we took 80%. Now we can let 20% ride. So now at this point, we've booked 80% in the BA and also 80% in Apple, and both positions are open with 20% holding, except that BA. I already gave you an advance notice. We closed it at noon, but you don't know that at this point because I backed up in time for Apple. Okay, so now we're going to look for another setup on Apple to enter again. We booked 80%. We're riding that 20, and we can look again for another entry because typically we know these things will pull back later in the day towards that 21 period exponential moving average. So we're going to wait for another setup like that Know Your Limit 21 that's just very likely to develop later. All right. However, the next thing which happened in an actual in the timing of the day was to take profit on that remaining 20% in BA as the day highs broke and going into the lunch hour. And here's what it looked like again at that time. So now we've got BA, we've got nothing in BA left. We booked on that complete trade and we're out of it. However, we can look for pullbacks again to that 21 later in the day. And here we go. There's a little bit of a dissection again, reviewing on the exit points on that Boeing trade. Then after lunch, about at 12:30 p.m. Eastern, guess what? Boeing pulled back and actually did pierce the 21 EMA. I mean, it doesn't get any more textbook than that. We were prepared for it. We had a plan. We're watching it like a hawk for that pullback. We watched it pulled a little bit below the 21 EMA and a little bit deeper right towards that VWAP, which was right below it. That gives us, with those two lines of the 21 EMA and the VWAP, that gives us a perfect buy zone right in between those two levels. And here's what it looked like at the time. At the time, it looks very bearish. You know, you've got a big drop off the highs and it looks like it's plummeting. But guess what? We know from experience and from the design of our setups that is very likely going to be the buy area where the algos are going to come in and start buying again. If you look to the left of the chart, that was the exact same area in the morning when they were buying. So all it did was dip right back down into that same area. So we're free and clear. We're not holding anymore. We weren't holding a position that's falling all the way back down here to zero against us. This gives us a free and clear mind, no stress, where we can jump in again and feel comfortable and confident buying right back into it again as it comes into these same levels. So there it is. That's a little bit of a combination between the Know Your Limit 21 and the VWAP. It's right in between the two, but to me that's a perfect zone to buy, and we can get in with a very tight entry right there. Okay, so immediately after that level was hit, there was a great reaction. We have no stress. We're immediately green. I mean, we had to be really quick to get in. Again, we're buying with limit orders at the bid price. It was perfect with the spread in our favor. We're immediately in profit. So there's no stress on that whatsoever. Now, the smart and most conservative first exit for 80% of the position logically would be right back where price moves up, back up into that 8-period EMA, which can now act as resistance. And here's what that looks like. So essentially three candles later, or on this fourth one after it popped through, you could take profit easily right in there on the first 80%. And that's a very nice catch. So there you go. We take off 80% right in that area. Now we can easily hold 20% for new day highs, or now we can say, we'll just hold this thing until the end of the day because things are looking so bullish. So we got 20% left. We've already booked on other trades on this thing. Let's just give that 20%. We'll ride it till the end of the day and see what happens. It's a free trade, no risk, and that gives us a chance to hold a winner for as long as possible. The key point is we have choices. We're not stressed. Nothing's, we're not under any kind of pressure here, so we can have a clear plan and make that decision and stick to the plan once we make it for the rest of the day. Also, we're now free to look for another entry on Apple because we just banked that 80% on BA. So again, our mind is free and we're able to look at another opportunity without any stress from trying to manage another one. So here we go. BA continued higher, made a new high, so you could decide a few minutes later. Nothing had developed on Apple yet, so you could exit that other 20% right there if you so inclined, but we made the decision to ride it out for the rest of the day just to see what happened. But either way, look, you're doing just great. You made money on all segments of that trade, and money is money no matter where you decide to exit. It continued higher. Now we're up around 2 o'clock and it's still moving higher. 2 p.m. The next thing that happened was we did get that beautiful pullback in Apple we were expecting, and guess what? Right to the 21 EMA. So there's where we pulled the trigger, and we enter again with call options. It exactly pierced that 21, the blue dental floss line right here on the chart, and you see exploded back upward. Again, you got options. You can take your 80% off as it makes this pop up toward the highs and then hold the other 20% for the rest of the day. Or you can decide to hold the whole thing. You just have options at this point. You can bank the quick money on a portion of it. You have so many options. So this time we had the confidence, so we took 50% off on a move back to the highs and then held the rest. So this just shows you another way you can manage it Um, just from the day's action, and because we already had a lot of money in the bank, it was easy to take 50% off, holding it for a move back to the highs and then hold the rest. So as you see, that was a good decision, but we didn't know that at the time. But in hindsight, I'm just walking you through the thought process as it occurred so you can have a plan. Once it unfolds, you're not dilly-dallying and confused and don't know what to do. Should I hold it? Should I close it? Whatever. You make your plan in the action as things are unfolding, even in the uncertainty, and stick to the plan, and there's no stress. Meanwhile, let's look at what's going on in BA as the rest of the day unfolded. And that was holding it till the end of the day. Boom, it went all the way up here. So we're basically saying on from the point of entry, say at 135.30, all the way till, call it 149.30. So 135.30 to $14. Got a $14 move on that remaining piece. So that's how you get a big move. We didn't know. You don't know how high it's going to go. But if you give it a chance, a lot of times you will catch a runner like that. And there you go. We got $14 on that, on the last 20% of those calls. And then here's how Apple unfolded as we rode the rest of that into the close. Boom, just an explosive end of the day, shorts covering and just more longs piling in, and it continued on all the rest till the very close. So from our entry on that one at 254.68, it went to 262, say 262.68, so 254. We got $8 on Apple on that last 50% of that position. So another great winner, and that's how you let your winners run when they're running, and how you can turn those quick 20-cent profit moves into a much bigger move while having no stress in the trade at the same time. So the key point of this is consistency. This market is tricky, of course. It's violent. Some people would, I'm not going to call it violent, but a lot of people are calling it violent and just, chaotic, because we're down horribly, then up and down, and it's all over the place. But with these simple, stress-free setups that causes no psychological toxicity, we are able to be in the green almost immediately after entering. We're booking profits consistently, and we're not letting these trades come back against us because of the rules we're using that allow us to take quick profits and then other profits to completely close the position and then enter again on the pullbacks. We're not chasing breakouts and all of that. We're buying on the pullbacks at typically what are ending up being the very lows. So here's how, with a plan, no toxicity, and consistent profits, you are generating money into our accounts day after day, regardless of what's going on in the market, whether it's bearish, whether it's bullish, what happened yesterday, and so on. We are calm and patient and trading the very simple setups that we have defined, which are over 80% consistently successful. And we stick to those rules, and that's what we're doing. And this is exactly how it played out today beautifully in these two stocks. We didn't overtrade. We did everything right by the book, basics, and keeping it simple. And yet again, another day of pure consistency in the markets. So let me exit out of this presentation, and let me show you a little bit on the charts a little clearer. So here was the BA. We got the gap up and it dropped off. It started selling immediately. First 15 minutes were selling down into the gap. And then the buyers came in, it popped up, it pulled right into this zone right here. You see this zone? This is the 8 period, the yellow line, the yellow dental floss squiggly is our 8 period EMA. We had this pivot. It dropped right in there, almost touched that VWAP, and you catch it anywhere down in here where I have that little ellipse drawn, the little circle, and you're golden. Immediately pops up right here to the 136 level. So it dipped down below 134, pops up $2 to 136. There's where you take on that pop. That's where you take your first 80% profit. They stabbed it down again, and that you could have been aggressive and bought in again. Right here, it's still a buy zone, and you booked 80. I wasn't being aggressive at this time, but you could have. You could have been aggressive, bought another 80% or another full position, and then sold 80% when it popped right back up again. But I didn't do that, but that's certainly a viable course of action to take. And you could have just banked, 2 quick ones right there, a lot of good money in the bank, and then very easily hold the remainder and just really increase your profits. Depends on how aggressive. On a Monday, I wasn't feeling that aggressive, so I didn't, but it is a very viable thing to do. So what we do, we just consolidate a little while below this resistance, and then eventually pops through, makes another new day high, and that's approaching the noon hour. So there's a good logical exit point anywhere in that area right there. Okay, noon, lunch, it pulls on back, it drops through the 21, this blue 21 EMA right here. And you could have, so what, you could have bought it right there and held for this drop. What I did was I wait to see the reaction right there, see what it's going to do, because I know anywhere in this zone is a good buying area. So another option you could have done was buy half your position right here and then half again as it dipped on down further into the zone towards that VWAP. A lot of ways to play it. If you just are, you're just comfortable doing the one entry, then just let it see how far down it's going to go as close to that VWAP and then buy. I already showed you what the candle looked like at the time. It looked very bearish, but then quickly changed as the buyers, i.e. algos, started piling in and buying it up right there. Now, where do you exit? You can exit anywhere on this first pop, or this right into the 8-period EMA right here or above it. You got so many options. The point is, once it popped up out of that buying zone, you're in profit. Then you can decide where to sell your pieces anywhere along the way. So what did it do? It popped up above that 8-period EMA and just took off. So you have several options for selling, and I sort of pointed them out with the arrow all along the way, where you could have easily sold in comfort, no stress, and held the rest of the day all the way to highs. So hopefully you can study this chart and get a good feel and a good sense of how to manage and stage out of your positions so that you can actually capitalize the best way on a longer runner. Let's go back over to the Apple example here. Again, we got the gap up, it pulls back, it moves, makes another move. So we're not buying, we're just patiently waiting. All this, yes, that's a bull flag, and it continued, it broke out of a bull flag. We missed all that. Those aren't our setups. So we're not chasing any of that. We wait for a pull down right here through the 8-period exponential moving average, which it did right there. And there's our VWAP right below, giving us further support if that thing decided to go any lower. So we know this is a very good buying area right here in this zone. Perfect. We buy in right at these lows with our limit order at the bid price on calls, and bam, explodes up out of there in the next 15-20 minutes, right back to day highs. There's your good point to exit 80% of your position, or all of it, however you want to manage it. I'm not going to get into the micro managing the rest of that section through lunch and all of that, but you could have exited here at this another break of day highs going into the lunch hour. That would be another exit for the other 20% if you would have exited 80% here. Next thing that happened after lunch, here's the dip. It pulls back, dips right into that 21-period moving average. Look at that. The blue line, perfect. Those algos are just sitting there waiting for it. Look how pure and textbook that is. Pierces right through it, and price just takes off and goes for the rest of the day. All the way into that explosive close we saw earlier. So I hope that gives you good insight into the setups we're using, how to time, and how to clearly see that the entries are developing and where you would enter, no matter what it looks like on the chart. It may look like the thing is collapsing, but it is still a reliable location to buy. Well, in an up move, there will be other days which are shorts. It looks like the same thing, just in reverse. But hopefully you can see, keeping a clear head with a clear plan, these setups are working beautifully and consistently making us money day in, day out, money in the bank. So hopefully you enjoy this and can start practicing it, taking advantage of it, and I hope everybody makes a lot of money. I'll talk to you in the next video.